What's up guys, this is Gerard back to you with another tutorial video on taxation. So on this video, I'm going to be talking about your corporations. So on this video, I'm going to be defining what a corporation is and then also enumerate the list of entities that are considered as corporations. And then discuss the classifications of your corporation and then explain the taxability of our corporations. So a corporation is an artificial being created by operations of law, having the rights of successions and powers, attributes, and properties expressly authorized by law or incident to its existence. So for tax purposes, these are also considered as corporations. We have your joint stock companies, we have your joint venture and joint accounts, we have your partnership excluding or except your general professional partnership, we have your insurance companies, and you have your associations. So we can classify your corporations actually into two. We have your domestic corporation and then also your foreign corporation. Now, when we say domestic corporations, these are corporations formed or organized using your Philippine laws. But for foreign corporation, these are formed, organized, or existing other than your Philippine laws. So I'll be discussing first your domestic corporations. Your foreign corporations, I'll have a separate video on that, so make sure you subscribe to that. Domestic corporations in general are taxed on their taxable income from sources within and without the Philippines at a rate of 30%. They may also be taxed using your minimum corporate income tax or MCIT, which is 2% of the gross income. Now, MCIT shall be imposed whenever a corporation has zero income or net loss, or the computed MCIT is greater than the normal income tax due. So corporations may also be taxed using your preferential rates, particularly if they are educational institutions and hospitals that are non-profit. They are taxed at 10% on their taxable income, except for passive income, which are taxed differently. Now, in addition, we also have government-owned and controlled corporations, or your GOCC, also having preferential rates. Now, corporation may earn certain passive income. Now, those passive income shall be subject to different types of tax rates. Now, I have a separate video talking about your final taxes on your passive income, and I'll link that right up here. Let's have this problem to illustrate corporate taxes. A corporation was formed at the beginning of 2015. The statement of comprehensive income showed the following for the taxable year 2020. Notice the year the corporation was formed and the current year. We'll indicate the importance of that later. The net income reported is 3 million. This will be simply multiplied to 30% corporate income tax rate. Therefore, the tax due is 900,000. Now, using the same problem, but this time I'll demonstrate using the minimum corporate income tax or MCIT. So let's say that the other expenses is 7,500,000. Thus, our net income is now 500,000. MCIT is applicable starting on the fourth taxable year following the commencement of operations. So from 2015 to 2020, MCIT can now be imposed. Now select whichever is higher between computed regular corporate income tax versus your MCIT. The computed regular corporate income tax is 150,000, but the MCIT is 160,000. Therefore, our corporate tax due will be the computed MCIT. Let's move to our next problem, a proprietary educational institution which could avail of the preferential tax rate of 10%. So for the school to be qualified for the preferential tax rate, the percentage of revenue from the unrelated activities should not exceed 50%. Now in this case, the 29% is still well within the limit. To compute the tax payable, the net income of 7 million will be multiplied to 10%. So we have a corporate income tax payable using preferential tax rate 700,000. So that's it. So make sure to subscribe on the follow-up videos on this topic. So if you found this video very helpful, please give it a thumbs up and consider subscribing if you haven't yet already. So this is Gerard. Have a great day.